Welcome to another stage analysis video. It's Sunday the 14th of January 2024. Lots to get through as always with the weekend video. I'm going to start off with the major indexes low first, starting with the S&P 500 here. So at the bottom of the chart we've got the combined percentage of stocks above their 50-day, 150-day and 200-day moving averages combined chart, which is a custom breadth indicator that I do for the members on the site, which has moved into more neutral territory at the moment, pulling back below the 5-week moving average here of that. So currently at 62%, so still in what we call the stage 2 range here, so anything above 60%. This covers the entire US market in terms of the NYSE and Nasdaq composite stocks combined, so around 5,000 or so stocks, so 10 times as many as we see in the S&P 500 here. So while the S&P 500 was up 1.84% for the week, and the majority of the other major US markets were as well, except for the small caps, we saw the broader index actually show a decline in terms of the percentage of stocks above their short, medium and long-term moving averages. So a little bit of a divergence there, and potentially because we're in a near-term base structure, so that may indicate that there's more consolidation to happen here maybe. But at the moment, S&P 500 back testing the recent highs again, getting close to the all-time high set back on at the end of 2021 there. So at the moment still in a stage 2 uptrend following the continuation breakout back in November again there, so still strong position for the S&P 500. On the daily chart you can see the recent range a little bit more clearly, so it's been going sideways now for most of the last month, so but still pushing above the 180R level. So this is the plus 180R level above the 21-day exponential moving average here, which gives a rough idea of when you're in a short-term uptrend. So normal to get pullbacks below that, but you can see since the November spring low down here at the end of October, and it moved out in early November. This is the first change of behaviour I had, the first bit of sideways action. So currently sitting right at the top there, but still in a short-term uptrend position. But if it starts to break back down below this once more, then that would certainly be a slight change of character over what we've seen in the last few months. Percentage of stocks in the S&P 500 above their 20-day moving average. So short-term moving averages here has dropped back to 58.4% here as this consolidates near the highs. So again, a little bit of a divergence compared to what's going on with the price action here. So S&P 500 price holding up more than the percentage of stocks there, so a little bit of weakening under the surface in the short-term breadth there. Nasdaq 100 in a very similar position, testing the all-time highs again. Percentage of stocks above their 200-day moving average at 81% at the moment, so still in a strong stage 2 position. Been stage 2 continuation now for the last few months or so again, following that pullback into stage 3, but moved on to that continuation. Look at the daily chart again, still hovering above that 180R level after the recent pullback, which was a little bit of a change of behaviour, but not yet a major change of character. Again, if we do start to drop back below the 21-day moving average again, and particularly back below that minus 180R level in the bottom of this range, then that would certainly be a change of character. But the rising 50-day moving average still coming up to meet the bottom of the recent range, so still some near-term support if we do see continued pullback here. 60% of stocks above the 20-day moving average at the moment, so this is certainly showing divergence compared to what's going on with the price action here as well, but still in a good healthy position. Nasdaq composite not as near to the highs as Nasdaq 100 and the S&P 500, still a way off there. Look, we still got a good 8% or so to go to get back towards those 2021 highs. Again, stage 2 continuation recently, still holding above its 10-week moving average, so 47.48% of stocks above their 200-day moving average at the moment. So the composite itself in a more neutral position in terms of its internals, but again held back by the large weighting of healthcare stocks within the group, which have shown some recent strength, but during 2023 had been a major laggard. So the fact that there's a large percentage of those in the Nasdaq composite makes it gives the breadth a little bit more of a lag than we've seen in the NYSE, for example. Move on to the daily chart again, very similar position to what we see in the Nasdaq 100, 46 45.87% of stocks above their 20-day moving average, so a little bit below neutral. So compared to the price action here, which is above its 21-day moving average there, the internal showing a little bit more weakness again. So a bit of divergence again going on here. In NYSE, so stronger in terms of the internal, 69.16%. We've had a really strong move in financials particularly, which dominate the NYSE index. There's a large amount of those in the NYSE. We've been consolidating for the last 3 weeks or so now as well, but still in a strong early stage 2 position after a few attempts to break out into stage 2 in 2023 had failed. So this one so far is having a bit more success and still way above that 10-week moving average there. So it needs to pull back around 3% or so to move back towards its 10-week moving average again. Looking on the daily chart, still basing as we're seeing with the other indexes in the near term after the recent strength, but nothing dramatic yet. Still above a rising 20-day moving, 21-day moving average, above a rising 50-day moving average. Still looks got a good 3.5% or so back to the 50-day moving average, and they 50-day and the 200-day cross recently, so 46.55% above their 20-day moving average in the NYSE, similar to we're seeing in the Nasdaq there in the short term, but again the price action slightly outperforming what we're seeing in the breadth. So Dow Industrials don't normally show these, just wanted to show this because of the recent strength. Percentage wise it hasn't done as well as some of the other indexes, but in terms of just pure move it's been consistent, and the consolidation's been very tight, still with a strongly rising 10-week moving average there, and 86.67% of the stocks in above their 200-day moving average. So stage 2 conditions for the Dow at the moment. Again with the daily chart hovering around that 180R level there, starting to see a little bit of breakdown in the breadth below that 70% level. So when you're above that key 70% level, you tend to be in a strong uptrend. Pullbacks bring you back down into the middle ranges. If we start to dip back below that 50% level particularly, then that's when it would slightly be a bit more of concern. But at the moment still in a normal position in terms of the breadth at 60% at the moment, and the price action still hovering in that short-term uptrend position while consolidating. The Russell 2000 on the other hand this week had a bit of a different week. We saw only a 0.01% negative move on the week, so still hovering above a rising 10-week moving average, sitting at the top of the range. So this sideways range that it's been in for the last year and a half now. Had a few attempts within the broader structure to break out into stage 2 that failed, and finally made a new stage 2 attempt. So at the moment pulling back into that, hasn't yet undercut that level, so it's sitting right in the backup position at the moment. So if it does start to, if we do start to see a turn back up and out, then potentially that could form the secondary entry point in stage 2, the backup. But if it does instead continue lower back below that 10-week moving average, and we start to see that turning, then that would be a more negative, and again once more would turn it into an up thrust. So need to drop to lower time frames in order to see what's going on with this at the moment. If you drop to a half-day chart here, the 195-minute bar, we're in a early stage 4 position on that time frame. 2-hour chart is just potentially starting to show some stage 1 characteristics, but could still make a continuation break. But if it breaks to the upside there, then a stage 2 on that. 1 hour stage 1 characteristics on this one, but sitting near the bottom of the range, so you need to see a break to the upside in order to get that backup entry point come in. But obviously a continuation to the downside would put that back to stage 4 again, and even short of the 30 minutes, similar kind of position, stage 1 kind of structure, but at the moment still sitting near the bottom of that. So we go to the daily chart. If we do see that break to the downside, then the logical point would be the rising 50-day moving average for the next point of support, and that would bring us right into the stage 2 breakout area, which was on this bar here. So be an interesting one if it does start to pull back into there. But if we do again see a break back to the upside here, then that would form the backup entry point in the method. So only 34.33% of stocks above their 20-day moving average at the moment in the S&P 600 small caps. We use this as the proxy for the Russell 2000. So we don't have the data for that, but does a really good job of getting a close enough amount to that anyway. So at the moment, relatively weaker than we're seeing with the other indexes still, but did have a really good initial run. And if we put quadrant lines on this, so break it up into the 25% range, as you can see, the pullback has only been just to around the 25% level at the moment. So even a normal pullback could take it all the way back down into this area down here, which was just slightly below the stage 2 breakout area there and below the 50-day moving average, but that would still be within a normal pullback after this exceptionally strong move that it had from October to the end of December there. So interesting one on the Russell 2000 at the moment.